Bitcoin trades back above 69,000. Crypto.com lands a landmark U.S. bank charter. Strategic reserve speculation and Michael Saylor's $40 million Bitcoin buy. And the UK green lights stablecoin sandboxes. First, guys, Bitcoin traded above 69,000 today, following President Trump's State of the Union address. The president did not reference digital assets directly, but reiterated expectations of a roaring economy and announced no new aggressive tariff hikes. Market data shows roughly $52 billion added to total crypto market capitalization over the session, with Bitcoin rising more than 5%, reversing a mid-February drawdown. The move was confirmed across major exchanges and index providers as risk assets broadly firmed up. Mechanically, this reflects renewed macro risk appetite rather than a protocol level change. It alters short-term positioning and leverage dynamics, but it does not change Bitcoin's issuance schedule or ETF flow structure. This doesn't move fundamentals today, but it resets sentiment. And the real question isn't the speech, it's whether macro tailwinds persist into the quarter end. And next, guys, different market, same theme, because Crypto.com received conditional approval from the Office of the Comptroller of the Currency for a U.S. National Trust Bank charter. The firm will operate as Crypto.com National Trust Bank, enabling federally regulated custody and settlement services. The approval was confirmed through regulatory channels and company statements. A national trust charter places the firm under OCC supervision, aligning its custody operations more directly with traditional finance infrastructure. Mechanically, this reduces counterparty frictions for institutions requiring regulated custody frameworks and could lower barriers for asset managers allocating to digital assets. It does not, however, change capital treatment rules for banks broadly or eliminate ongoing compliance scrutiny. Small headline, structural signal. The real shift isn't branding, it's jurisdictional legitimacy. A deeper regulatory analysis is definitely warranted. And unrelated on the surface, but connected underneath, we see Michael Saylor's strategy purchased 592 additional Bitcoin for approximately $40 million. Just when we thought he was done, just when we thought he was going under, boom, he makes another massive buy, bringing in his total holdings to 717,722 Bitcoin. The acquisition was disclosed in company filings. Separately, Cathie Wood stated in an interview with Bitcoin Magazine that the U.S. Treasury may begin active market purchases for a proposed strategic Bitcoin reserve later this year. There's no formal Treasury confirmation or purchase timing agreement. Mechanically, guys, Strategy's continued accumulation tightens liquid supply at the margin. Reserve speculation, if realized, would introduce sovereign bid dynamics. At present, only the corporate purchase is confirmed. Federal buying remains speculative. And this does not change today's liquidity profile materially. The real question isn't whether accumulation continues, it's who the next structural buyer could be. And guys, different asset, same pressure, because the UK Financial Conduct Authority selected 4 firms, including Revolt, to test stablecoins in its new regulatory sandbox. The FCA confirmed the pilot as part of a broader framework to finalize UK stablecoin legislation expected by summer of 2026. Participating firms will trial issuance and settlement models under regulatory supervision to inform permanent rules. Mechanically, sandbox approval allows controlled experimentation with defined compliance parameters, accelerating feedback loops between regulators and issuers. It does not yet authorize full-scale retail stablecoin deployment. This doesn't expand supply overnight, but it formalizes regulatory intent. And the real question isn't whether stablecoins grow, it's which jurisdiction captures the rails. So in conclusion, across markets today, the signal is not volatility, it's positioning. Macro tone is lifting risk assets. Regulatory frameworks are tightening institutional pathways. Corporate accumulation continues. Jurisdictions are competing for payment infrastructure relevance. None of these headlines individually redefine the system, but together they suggest incremental integration rather than disruption. We will soon break down the structural implications in a separate deep dive segment, but for now, this is Luke with Ledger Prime, and we will see you in the next one.